How's it going, guys? So today is November 4th, 2021, and AMC closed the day at $40.05, which is a pretty strong close. I wanted to discuss a couple of things today. One, my intraday target and why I was incorrect on that. Two, an acceleration in the pattern, along with why we saw the spike we did and why I think we're still tracking pretty nicely. And then I also wanted to talk about the macro and micro time frames and seeing these certain patterns play out, and why I feel like a powerful move is in the cards. I also wanted to talk about earnings as well. So yesterday, I wanted to make a prediction that we would see a break of 44.44. Just judging off of this gap up, I thought that we were actually at this part of the May run-up. However, doing some digging and some analysis, I realized that I was completely wrong in this, just because of the fact that this was due to a BBBY catalyst, supposedly, where it caused the run-up in the meme stocks and everything like that. But, if you were to take away this run-up and where we are today, we're still in respect of a couple of things, which I wanted to get into right now. So back then, I wanted to go back in time real quick. Around October 6th, I remember Jen Collado calling out an inverse head and shoulders that we were forming from September 20th all the way to the 6th. We had a crucial breakout of this neckline right here, which resulted in us accelerating into another fib retracement zone and coming back to test these support levels, assuming that we were good. Now, if you were to drag this neckline down, you can see that we also respected it down here as well. Now, what does that mean for us moving on? Well, right now we're kind of forming a micro inverse head and shoulders, which I wanted to get into right now. Here we go. Or a macro, I'm sorry. I'm so stupid. So macro movements, like I said, are really bullish movements. Macro movements encapsulate a micro movement into having more relative strength. So if you take a look right here, I'm going to blow you guys' mind for a second. You have another macro inverse head and shoulders within this, encapsulating this micro inverse head and shoulders. We actually broke out of this channel that was caused by the neckline, and we also retested this trend line that was headed down, I believe, all the way from the all-time high if I were to extend this line. So judging by this and the fact that we broke above the macro inverse head and shoulders neckline and we confirmed a higher low off of the neckline after we touched it maybe twice or three times during the day, is very bullish to me. In case you guys can't see it, I'll draw it out for you guys right now. I'll show you guys what I'm seeing. So what do I mean by micro and macro? So there's your micro break of the inverse head and shoulders on a smaller scale that's being encapsulated by this macro inverse head and shoulders, which I'll point out right now. And then there's your macro break. So you see how on it you can adjust this. Actually, I just noticed this isn't even parallel. Somewhere around there. It give or take. You had a break that was valid along with following some sort of a pattern right here. It's up for debate on a bunch of time frames. You see a lot of symmetrical triangles. But I mean, to me, it looks like a carbon copy just plastered on a bigger time frame. So what am I expecting? Well, at the least, hopefully by tomorrow we could close above 39, which would still put us in the respects of our last May run-up between the 0.5 and the 0.618 fib level, which we kind of are hovering over right now. But even if we descended down right above 39, we would still be respecting these levels as if we didn't even run up from here in the first place, which would still make us remain bullish. Now, the reason why we had this violent spike as well, in my opinion, is because we did break out of this head and shoulders, and it was confirmed by the volume as well. So, I mean, that's my take on the overall intraday look, in case you guys were super technical on that. Overall, for the macro look, I'm still bullish, which I wanted to clarify right now. when I make a prediction in the titles, it doesn't overshadow my overall prediction that I have in the description. Usually the title predictions are just for fun, and I don't want you guys to take anything that I say seriously. As you can see, it says not financial advice down below. So we pretty much covered these, along with the fact that we were respecting the neckline. And now I want to talk about earnings. So judging by this breakout, if we were to respect this neckline and see a catalyst start to form for us to see some potential upside, you know, earnings is very reputable and providing upswings post, you know, after the earnings are announced. Prior to earnings as well, you see super strong run-ups leading up to it, leading up to the news being announced, and then after the earnings are announced, you see sort of a dump off. It's kind of like it's not really a golden rule in the stock market, but it's like buy the rumor, sell the news. You don't want to get caught up not only in the news aspect of it, you know, when people are selling off, just what's the word called? It's like, it means like emotionally, like whatever. Like it's not an emotional. You don't want to get caught up in an emotional sell-off. But the fact that, you know, let's say the earnings were bad or whatever, not only are you getting caught in an emotional sell-off, but you're also getting the backhanded slap of, you know, the earnings being bad, let's just say. So that's why people buy the rumor beforehand, so that way they don't have to deal with the impact of the catalyst, whether good or bad. So because of that, I'm expecting volume to pick up sometime next Monday, so that way we could potentially see a break of that 44.44 level, and hopefully when the earnings are announced, we see a quick little, quick test of the 50s, or not at the most, probably like the 48.5 level at the most, and then we get rejected, but we retrace back above and close above 44.44, and hopefully we can respect that level right here, and it'll look something similar to this. You know, mind you, a lot of the things that happen in the market, as we've proven time in and time out, is pretty cyclical. You know, the run up to earnings, hopefully, will look a little something like this. I wrote by 11/8, hopefully, maybe about 3 days ago, because I realized this is what it could look like. Something like this, maybe. It's up for debate. What else did I want to talk about? Respecting the fib level brackets. This is why I don't have any doubts heading forward. We're still respecting these levels quite well. Just pretend that we didn't have this run up, and right now we're sitting in between the bracket of the 0.5 and the 0.618 on this bull crawl. And if you take a look at our May run up, before we even had this spike, we were sitting right at the 0.5 level. So we're a little bit ahead of the steam in terms of the time, but I do expect us to retrace back down to 39 come Friday, hopefully. Maybe you even see a dip below 39.8 to ride out this neckline. Fundamentally, it wouldn't make sense because we did make a higher low, but in the macro aspect, it's still a bullish formation. Because to me, this honestly just looks like an accumulation phase on a micro scale, which should set us up really nicely if we were to see some more upside. So covered these two right here. Now I wanted to get into the emotional aspect of this. Yesterday made me realize that I need to not get over on my head about huge moves, because let's be honest here, this was a pretty unsustainable move. And this is why I like this bull crawling action, because notice how here, this is healthy price action where you test another range, you come down, you see if you're comfortable holding the support, you test another range, you come down, see if you're comfortable holding support. When you have quick little moves like this, you don't know where you're comfortable. You know what I mean? It's almost like think of it like a warm-up in a sport, you know what I mean? Like, you have to get your shots in before you see before you gauge whether or not, you feel like you're gonna shoot better in the game, or you feel like you're gonna just focus on your passing more than in the game. you know, things like that. You know, if you just go out here with no warm up, you know, you're not gonna see where you gauge at, so you're just gonna go back to kind of where you started. So you know, that's a cool little analogy that you guys could use, hopefully. But in terms of remaining emotionally calm, again, this is exactly why I don't look at micro movements like this. Because if you take a look at the daily, I mean, it just tells a completely different story. Like, oh my God, that's a lot of stuff. Hold on, let me hide this stuff. My gosh, there we go. Our wick formed a higher low, and then on top of that, we did have a MACD crossover, which should assist in whether or not we see more upside. Let me go ahead and type that in. Oops. Oh, I'm in financial. Sorry. There we go. So we did have a flip to the upside. Now, remember, the more we flip, the more, you know, we are not comfortable at these levels in the short term. You know what I mean? So that means that a long-term move is in the cards soon. And because we are at such an oversold level in terms of the retracement values of the daily, if I were to draw this, chances are we would see a better chance at seeing some upside more than some downside. I don't want to draw the retracement because of the fact that like it'll just blast all the drawings in you guys' face again. But if you were to retrace this, I want to say we're hovering right above the 0.382 and trying to break above this 0.5 at 40.33. So you know, breaking that would be major. You know, in seeing where we are and gauging where we are, and hopefully earnings provides the catalyst necessary to break through these fib levels, so that way once we get above 44.44, we see some violent price action moving up to 48. So where do I remain in terms of my conviction? Let me go ahead and undo this. Oops. We'll go ahead and turn on these indicators again. All right, cool. So overall, for my next macro prediction, because I'm gonna stop doing micro predictions like intraday predictions. I don't like doing those. For my next macro prediction by November 9th, I'm hoping to be testing 50 to 52.75 at the most, but at the least, I want to see a break and a close above 44 post earnings. So I do expect a run up to this upper fib channel right here. This midpoint right here is equal to, I want to say, the 0.786 of this retracement if I were to draw it. So that would be a really good rejection for us to hit prior to us consolidating above 44.44 in the next couple of days. But don't worry, don't get in over your heads. Just remain diligent in your position. I mean, you know, back here it looked like all hope was lost, and all it takes is a little TA to make sure that you guys are comfortable with wherever you guys stand. And I'm glad to, you know, reassure anybody within this. It's been a hell of a ride too. Trust me. Right now I'm playing options, so I've literally seen my net account value go from negative 30% to between negative 40%. Negative 45% actually, all the way back up to break even, and it's crazy. I was like, holy shit. So you know, it's got me hyped. And on top of that, if I were to talk about the option chains as well, volume and implied volatility is actually picking up for some of the options, and a lot of people are selling puts. When you sell puts, you collect premium if the price action of the underlying stock goes up, which basically means that whoever is selling the puts to poor suckers who are buying these puts, they're going to profit off of the opposite happening, which is bullish. I remember back then I saw someone sold like $10 million worth of puts expiring in December, and I think someone bought like December 17th calls expiring above the $60 strike, which is also really bullish when you have whales doing that. So, you know, oh, and also I was up on my options today, even though we were down negative 1.81%, which indicates to me that we might have a bullish move coming in. The last time I saw that happen was when we were consolidating at these lows right here around 35. and I was actually netting 0% on my options 3 days in a row actually. And then we saw this little reversal. So, you know, hopefully we can continue this same thing and we could respect somewhat of this trend line going in. But the major respect of the trend line that I want to see is respecting this break of the net line. If we could do that, then, you know, we should be good in the overall. And yeah, it's 44.44 still in the cards, hopefully by November 9th, end of day. So yeah, appreciate you guys. Thank you very much for watching. Have a good one.